This is Pranav Rao from Smartkarma, and I'm pleased to have with me Brian Freitas to talk through his recent insight on a large uranium index and its rebalance. Brian, thanks for your time today on the 22nd of January. Can you introduce the Global X Uranium ETF and the underlying index it tracks?
Thanks, Pranav. So, with the huge power demand of AI, nuclear energy has emerged as a reliable, low emission solution, and that is one of the main factors driving uranium prices. The Global X Uranium ETF is US listed. It provides investors with exposure to companies that are involved in uranium mining and in the manufacture of equipment for the uranium and nuclear industries. So the uranium miners could be involved in exploration or refining or extraction of uranium. The ticker for the ETF is URA. The ETF was launched in 2010 with around $10 million of AUM, and currently the assets are just north of $7 billion, and that's up from $5 billion just in the last 3 weeks. And that's driven by new ETF creations and rising stock prices, which leads to a higher ETF price. The units outstanding have been increasing steadily over the last 5 years and are now at a new high. The ETF tracks the Solactive Global Uranium and Nuclear Components Total Return Index. The index is made up of 49 stocks, and that increases to 52 at the end of the month, with 3 new stocks being added. To be eligible for inclusion in the index, the stocks need to belong to a developed market or an emerging market, with the exception of India, China, and Taiwan. Stocks need to meet market cap and free float market cap and liquidity thresholds to be added to the index. Now, stocks can either be classified as pure play uranium stocks or non-pure play stocks. By non-pure play, it's companies that are related to uranium mining, but they don't earn a significant portion of their revenue through uranium mining. The number of non-pure play stocks in the index is capped at 15. There's no cap on the number of pure play stocks. Non-pure play stocks are capped at 2% of the index weight, while pure play stocks are capped at 22.5%. So it makes a huge difference in terms of how much the ETF owns, depending on whether the stock is classified as pure play or non-pure play. In terms of performance of the index, it's up 27% in the last 3 months, 40% in the last 6 months, and just over 100% in the last year. As can be expected, there's a huge amount of variability in the returns of the stocks themselves. A few stocks like Doosan Enerbility, Hyundai Engineering and Construction, and Sibanye-Stillwater are up more than 300% over the last year. Centrus Energy is up more than 200%, and then there are a whole bunch of stocks up more than 100% over the last year. There are very few index constituents which are actually down over the same period.
Very interesting. Thanks, Brian. In your recent note, you flagged some key rebalance dates that investors should be aware of. What are those dates?
So the next rebalance takes place at the close on 30th January, and that would be based on prices and other data as of the close of 16th January. The rebalance was announced a few hours back, and there will be a whole bunch of trading in those stocks at the close on the 30th.
Understood. How did that announcement kind of pan out against your own forecasts, and what stocks do you think are going to see inflows and outflows?
Yeah, so I had 3 stocks as potential inclusions to the index. 2 of the stocks, Peninsula Energy and Anfield Energy, were added to the index. A third stock, Atomic Eagle, was added, which I had just missing the free float market cap threshold. So there's a fair bit to buy in the stocks, anywhere between $15 million and $50 million across each of the 3 stocks. Apart from that, there will be buying due to capping, and some of the stocks, NuScale Power, Nano Nuclear Energy, and Itochu, which will have between $15 to $30 million to buy. And there are stocks which will have outflows again due to capping, mainly Chemeco Corp, Sibanye-Stillwater, and Kazatomprom, where the passive selling will range between $25 to $65 billion.
Understood. Well, thanks for the call today, Brian. And listeners, check out Brian's coverage of global index rebalance on Smartkarma and tune into our next Smart Call. Thank you.
Yeah, thanks a lot, Pranav.